All right, so you've been diving deep into this whole AI thing, haven't you? You've given us a ton of stuff to unpack, reports, articles, even some like handwritten notes in the margins. Seems like you're trying to figure out if this AI thing is the real deal or just another bubble ready to burst.
Well, it's definitely got everyone talking. The potential is huge, but like you mentioned, we've seen this kind of hype before.
Exactly. And that's what makes this Goldman Sachs report so interesting. It's like
Yes.
they're saying, hey, tech's been driving market returns like crazy since 2010, but is it sustainable? A third of global market returns. That's got to make you wonder if we're in for a repeat of the dot-com crash.
Right, and they even ask that directly. Quote, the question for investors is whether this is becoming a bubble or an opportunity. So which is it?
A bubble or an opportunity?
Yeah.
What do you think?
Well, what I find fascinating is how they break it down. They're not just saying tech is up, therefore bubble. They're looking at whether these returns are driven by, irrational exuberance or actual company growth. And they make a pretty compelling case that this time it's not all just hype.
So not like the dot-com bubble where everyone was buying up anything with a dot-com at the end
Like
of it.
exactly. They're saying these companies are actually turning profits, valuations are more grounded compared to past bubbles.
Fine, but there's always a but.
But you've got this whole AI frenzy throwing gasoline on the fire.
Right. NVIDIA's predicting $1 trillion with a T flooding into AI by 2027. That's insane.
It's a huge gamble. It makes you wonder, will those returns actually happen? Because here's the thing, AI isn't some abstract idea anymore. It's driving massive investments across almost every industry.
Even those big players, the Magnificent Seven, as they call them in the report.
Even them, Apple, Microsoft, they're all pouring resources into AI, which means the stakes are even higher for them. That NVIDIA prediction tells me this isn't a fad, it's an economic earthquake. But who's going to be left standing when the dust settles? That's the real question.
Now, that's a question we need to explore. You've got all this money pouring in, the big guys making moves, and a whole wave of startups hoping to disrupt everything. What's your gut feeling on all of this? What's AI's real impact going to be? One thing that really jumped out at me in that report was the history stuff, like canals, railroads. What does that have to do with AI?
It's all about seeing the patterns, right? Those historical parallels, they highlight those boom and bust cycles that we've seen time and time again. Canals, railroads, the telegraph. They all had those initial waves of investment and excitement, followed by, well, reality setting in. More competition, consolidation, some winners, a lot of losers.
And this report argues that those early investors, they often miss a crucial piece of the puzzle, don't they?
They sure do. They tend to overestimate the staying power of those first movers, those companies that are first out of the gate. And they underestimate how disruptive those later companies can be, the ones that come in and capitalize on all the groundwork that's been laid. Think about the dot-com bubble, right? Everyone was so caught up in being the first to invest, they often missed the companies building sustainable businesses.
Oh, totally. Like, everyone thought Pets.com was going to be the next Amazon. It was those companies with solid foundations that actually ended up thriving.
Exactly. And that's why understanding this historical context is so crucial for navigating the world of AI. It's not just about identifying the big players, it's about recognizing the patterns at play, seeing those potential disruptions before they happen. And guess what? This report highlights how it's already happening in AI.
Oh, really? How so?
Take, for example, the rise of open source AI models. They're challenging the dominance of those big, well-funded corporations that everyone thinks are going to rule the industry forever.
So, just because a company is the first one to do something doesn't mean they're guaranteed to win in the long run.
Exactly. It's like a game of chess,
Yeah.
The board is constantly changing, and the players who can adapt, who can innovate those, are the ones who come out on top. The report specifically called out the telecom boom of the 90s as a cautionary tale. Remember that.
Oh, yeah. Everyone was investing in fiber optic cables like crazy.
That's it.
Excited to be part of the revolution.
And what happened? People poured money into building the infrastructure.
But it was the companies that came later, the ones who figured out how to actually use that infrastructure in innovative ways, that became the real winners.
Precisely. Makes you wonder if the same thing could happen with AI, right?
It really does. I mean, are we so focused on the algorithms and the hardware that we're missing the bigger picture, the killer apps, as they say, the things that are actually going to change how we live and work in a profound way?
Now you're getting it. It's not just about the technology itself. It's about the creativity and vision to use that technology in a way that truly matters.
Okay, so we've established that AI isn't necessarily a bubble, but we got to be careful, right?
Yeah.
History has a way of biting back if we don't learn from the past. But the report doesn't just leave us hanging, does it?
Yeah.
It talks about where the real opportunities might be. And they point to this idea of diversifying, moving beyond just those big tech players.
Yeah.
ETCs, right? Ex-tech compounders, I think they call them. What's the deal with those?
See, that's where things get really interesting. ETCs, these are companies with solid financials, strong growth potential. But here's the kicker, that growth isn't directly tied to the tech sector itself.
So instead of trying to pick the next Google, you're saying we should be looking at companies that benefit from AI indirectly.
You got it. Think healthcare, consumer goods, even infrastructure.
It's funny you mention that because some of the examples in the report really surprised me. Personalized medicine, I get that. Cybersecurity, definitely. But then they even mentioned vintage goods.
See, this is what I mean about AI's impact going way beyond algorithms and lines of code. It's about data, how we collect it, how we analyze it, and how we use it to change. Well, pretty much everything.
Okay, so how do vintage goods play into all of this?
Think about it. AI can help track supply chains, right? Authenticate products, even personalize the whole shopping experience. For vintage, that's huge. Builds trust, transparency, that's what people care about in that market.
It's like AI is this rising tide that lifts all boats, even if the boats are a little further downriver. But another thing that struck me was the report's warning about market concentration. How, like, right now, a handful of companies have all this influence.
And history tells us that doesn't last forever.
Exactly.
Remember companies like BlackBerry, Yahoo, giants in their day.
It's on practically overnight.
They failed to adapt and bam, new players came in and took over.
It's a good reminder that in the tech world, what worked yesterday isn't always what's going to work tomorrow.
It's like that saying, what got you here won't get you there. Right. But the report did mention something that might make this time a little different. They talked about tech being deflationary and how it's becoming increasingly tied to national security. What's that all about? That's a critical point. And it gets right to the heart of this whole to buy or not to buy dilemma. They're saying these two factors, the deflationary nature of tech and its growing importance to national security, could have a huge UE impact on how this AI revolution plays out.
Okay, so break it down for me. Deflationary. That means things get cheaper, right?
Mm-hmm.
Which is usually a good thing. But how does that change things for tech companies compared to, say, those energy giants we talked about earlier?
Think of it this way. When a sector is deflationary, it means it's constantly pushing prices down, making those products and services more affordable, more accessible. Governments love that, right? Keeps consumers happy, which makes them a little hesitant to interfere with things like regulations or antitrust actions. When was the last time you heard someone complain about their smartphone being too cheap or internet access getting more affordable?
Never. People love a good deal.
Exactly. But that doesn't mean tech gets a free pass. The report suggests that regulation is more likely to focus on things like data privacy, cybersecurity, the societal impact of AI, rather than just breaking up a company simply because they're successful.
So instead of trying to bust up Google, it's more about setting rules for how they use our data.
Exactly. And then you've got the national security angle. That's where it gets really interesting. As AI gets more and more powerful, it's increasingly seen as a strategic asset, like an essential part of a nation's strength.
Almost like a new arms race, right?
Exactly. And this makes governments much more likely to support their own tech champions, even if those companies end up growing incredibly large and powerful. It's a total flip from the old days of breaking up monopolies.
So we've got AI driving prices down, making it politically tricky to target them just for being big, and their importance to national security is only going up. No wonder the reports suggest that this time. Well, maybe it really is different. But for someone like me or like our listeners trying to wrap our heads around all of this and figure out where to put our money, what's the bottom line? What should we be taking away from all of this?
Here's the thing. This AI thing, it's not just hype. It's a fundamental shift that's going to reshape industries, create new markets, change how we work, how we live, how we see the world. But, and this is a big BUT, it's not just about betting on the biggest tech companies out there.
Don't put all your eggs in one basket, right?
Exactly. Diversification is key. Look beyond the obvious players. Think about those companies that benefit indirectly those ETCs we discussed. Healthcare, consumer goods, infrastructure, even those tapping into that desire for authenticity in a digital world, like those vintage goods we were talking about.
It's about understanding the bigger picture, seeing those ripple effects this technology is going to have on pretty much every sector.
And those ripple effects, those often overlooked opportunities, that's where the real potential lies.
Well, there you have it. our deep dive into AI and what it all means for you. Hopefully, this has given you a new way to look at this whole exciting, constantly changing world of AI. It's not just about picking winners and losers. It's about understanding the forces at play and realizing that sometimes the biggest opportunities are the ones hiding in plain sight. So, where will your deep dive take you next?